Same here.
Well, let's
Thank you.
focus on the consumption space. FMCG stocks are showing an uptrend as green shoots are becoming visible in consumption. In fact, FMCG companies have come out with fairly positive quarter one updates. So is demand recovery here? And what are the trends visible inside? To help us out with that, we're joined by Mr. Mayank Shah, the Vice President at Parle Products, as well as Vishesh Dora, the Chief Growth Officer at Bizom, who joins us. Hi, gentlemen. Good morning. Thanks a lot for joining in. Mr. Shah, you go first. Tell us, how are you reading demand on ground? First of all, break up, your mix for us between urban as well as rural. How is consumption on ground? And are you seeing a good revival?
Firstly, if you talk about the contribution of rural, if you look at our product range, almost about 55% of our turnover comes from rural. So in terms of our stakes in rural, we have a substantial stake in, rural India. As far as consumption is concerned, we are seeing, good demand coming in from rural as well as urban India. So as we all know, last year was a little difficult one for FMCG and urban demand was under stress. But thankfully, we've seen revival happening in the first quarter of this year, this fiscal, and we've seen, urban demand reviving. We will see, further revival of urban demand as we go forward. And rural continues to be, strong. So we continue, we see continued strong rural demand. Given, both urban and rural good demand, coming in, we're expecting a good year this year.
All right. What would good be, Mr. Shah? What is the industry growing at and what are you growing at? Have you gained market share?
Yeah, we gained market share last year. Last year, if you look at the industry grew at about 5 to 6%, mid-single digits. We grew at high single digit at about 8 to 9%. And that, gave us almost about 80 to 90 basis point increase in market share. If we talk about this year, current year, we're expecting, as far as the category is concerned, at least a lower double-digit growth. We are expecting at least 12-13% growth coming in, despite of, the challenging, situation as far as the input costs are concerned. So, if we talk about crude, we've seen, spike in crude, although it's gone down now, but some challenges remain. So, given, last year was difficult as far as input costs are concerned, there was, for the most part of year, it was very inflationary. And if that sustains this year, then, that would be one challenge that we would be facing almost all food companies or almost all FMCG companies.
Guys, guess what? We could do so with some biscuits here to go along with the chai right now. I think,
consumption.
Well, a hint to the PCR team. Maybe. But gentlemen, thank you very much for joining us, Mayank and Vishesh. I just want to, Prashant here, I just want to ask both of you this one question. Many have made the point that actually it's not consumption which has been weak. It is just too much competition across product categories. An intensified competition, especially over the last 3 or 4 years. Mayank, would you agree with that? Or you think it's a combination of both? Or it's basically, we're talking about different categories. So, in some categories that could be the case. Others, consumption itself has been very low. What would you make of it?
That's partially true. So, regional companies are growing, smaller companies are growing, and they're definitely giving, run for their money to the bigger companies. However, if we talk about Indian market, I think, in terms of penetration, in terms of per capita consumption, I think we have a long way to go up, and that's something that, probably is the reason why you'd see that, most companies are very optimistic when it comes to, capex and other things. And not just that, even in terms of, growth and consumption, we're seeing a continuous increase and a continuous, growth coming in as far as, certain categories like foods and, few other categories, adjacent categories are concerned.
Okay. Vishesh, same question to you.
I think
yeah.
I think largely great products are winning is what we've been seeing for the past couple of years. Of course, consumer sentiments are moving towards different kind of products. Distribution, of course, is a key node to win the market, but great products are taking the forefront. When you talk about, is consumption lagging? I don't think it's lagging. It's continuously growing. And we've been seeing great indicators of it, especially in urban, right? Large pack consumption is growing, out of home consumption is growing. Your smaller packs are not growing that well in urban. Premium categories are penetrating deeper, right? So urban market is set for a great revival of consumption is what we see.
Morning, gentlemen. Vishesh, particularly want to address this question to you. The big debate that's out there that says that really D2C has disrupted, perhaps structurally, that huge distribution moat that a lot of FMCG companies had enjoyed, especially, I think, in things like personal care, right? Where consumption is happening through your Instagram and ordering is happening through that channel or through, the quick commerce sites. What would you say to that? I mean, the effects of quick commerce and the way we will see volumes play out and just competitive intensity play out in the staples space.
I mean, if we still compare the vastness of the nation, D2C is still early in penetration. It will truly lie on how they scale offline. Online penetration of e-commerce is still, lower single digit, if I may say so. Right. So we are seeing that impact in urban, where great products, again, like I mentioned, are winning. Young brands who are investing into consumer-centric products. What we also see on the other side is large brands also adopting faster, bringing in or entering into categories which are D2C heavy. But all in all, you have to be offline if you want to penetrate deeper into the Indian market.
All right, Mr. Shah, coming back to you then, if you could tell us what is your absolute market share? You said it's improved by 80 to 90 basis points, and if you could mention the category as well.
Yeah, so as far as biscuits are concerned, we have about 29% market share. And if we talk about confectionery, which is also another mainstay that, we have about 15% market share. Within snacks, we have about 7% market share.
All right. And what about quick commerce? Has it affected your channel strategy? If you could tell us, how much does it contribute in your overall share, quick commerce?
Quick commerce contributes about 4.5% to our, total revenues. And I think, as Surabhi was just saying, or she was checking, I think, that's one channel that is making a huge difference. So while, you talked about D2C is, good for niche brands, very premium brands. But when it comes to, value brands, or when it comes to, categories which are deeply penetrated, I think, the last mile delivery cost is something that's prohibitively high in India for most D2C brands to, really succeed. I'm talking about, value and mid categories. In niche categories, yes, you can do with that. Whereas when it comes to QCom is something that, when you aggregate it and when you have aggregators, it makes a huge difference. And if you look at the growth rates in QCom, we are seeing, almost about 40-50% plus growth rates year on year since last almost about 3 to 4 years in QCom.
Okay, so gentlemen, as we wind down the discussion, we'll be happy to report that I think the Kirana channels are strong and they're thriving for most of the players because we've got our biscuits. Prashant, demanded, and it has been delivered
that makes
right in the time in which the discussion is on. And there's not Q-commerce. This is regular, general trade channel delivery, and it's working.
Since it's appeared so fast, I'm thinking, what should I ask for next?
Don't push it. We have to be satisfied with what we get.
I'll tell you in the break.
All right, gentlemen, thank you very much. Mayank and Vishesh, appreciate both of you coming in. Very interesting discussion, and hope we can do more of this to get a real sense, a pulse of what's happening on the ground across, a range of topics, really.